Hi, I'm Brad Case, Homes.com's chief residential economist, with one thing you should know about the homes market. Regional price differences are much more important than nationwide averages. The latest data from the Federal Housing Finance Agency show that many parts of the country are still seeing solid home price growth, while other parts have cooled noticeably. That's a pattern that shows up clearly in the longer historical data. During boom times, coastal and mountain regions tend to lead the market, whereas most of the Midwest and South tends to show steadier but slower home price growth. But in other times, like the current one where the overall market has cooled a bit, those coastal and mountain markets lag behind, whereas many of those Midwestern markets are still showing solid price appreciation. That's largely because they have a better balance between supply and demand and better affordability. That's why nationwide averages can be so misleading, because they smooth over real regional differences in things like market momentum and affordability, as well as underlying buyer demand and builder supply. If you're thinking about buying, what this means is that your negotiating position may depend on where you live, especially if you're in one of those markets that's ordinarily a little bit slower growing. You may have more bargaining power than you realize if you're paying attention to headlines that are based on nationwide data. Now, if you think about selling, this is a reminder not to price based on yesterday's market conditions, especially if you're in one of those markets that have seen a real softening in price growth. Accurate pricing can make a big difference. Here at Homes.com, we want to help you move beyond those broad regional averages. We focus on individual markets to help buyers, sellers, and agents understand what's driving market conditions at a very local level. When you get into the market, that can make a real difference. I hope it's helpful. For Homes.com, I'm Brad Case.